Hi, welcome to my channel. This is Kauserwise, and this is the continuation video of dissolution of a partnership firm. Already we have seen three videos. You can find the playlist link in the description box. Now in this video we are going to see insolvency of a partner when they are maintaining fluctuating capital method. Okay, I will tell you what is the meaning of fluctuating capital method along with the solution. Now let's get into the video. See the problem. Insolvency of a partner, Garner West Murray rule, when capitals are fluctuating. The following is the balance sheet of X, Y, and Z on 31st March 2021. Liabilities, capital account, X capital, Y's capital. General reserve, creditors. Asset side, furniture, plant and machinery, stock, debtors, bank, and Z's capital. Z is insolvent, but his estate pays 5,000 rupees. It is decided to dissolve the partnership firm. All assets are realized for 1,33,000. Creditors were paid at a discount of 2%. The dissolution expenses amounted to rupees 10,000. With this information, they are asking us to prepare the necessary accounts in the books of the firm when the capitals are fluctuating. Apply Garner West Murray rule. Okay. See, in the previous video we have seen when capitals are fixed. Okay. So according to the fixed method, the partners need to prepare separate ledger, that is partners current account is required. Okay, but here under fluctuating method you need not prepare partners current account. Instead you have to incorporate all those items under capital account itself. Okay, I will tell you other difference along with the solution. Now let's see the solution. See, first we need to prepare realization account. Okay, what is the first step? We need to transfer all the assets to realization account and provisions and third party liabilities to realization account. Okay, see here we have few assets. No, except three things we need to transfer all the assets. What are the three things we need to exclude? Number one, cash or bank balance. Number two, debit balance of capital account, and debit balance of profit and loss. Okay, so in this problem we don't have any debit balance of profit and loss account. Okay, so here we have few assets, that is furniture, plant and machinery, stock, and debtors. So these are the assets we are going to transfer to realization account except bank balance and Z's capital account. Okay, now see the liability side. Here we have only one third party liability, that is creditors. So this is the third party liability. We need to transfer this to realization account credit side. Okay, now let's see the realization account. See the solution. In realization account, we have transferred assets and third party liabilities. Furniture, plant and machinery, stock, and debtors, and liabilities, creditors. Third party liabilities, creditors. We have transferred. Now we need to enter how much amount we have realized out of sale of asset under credit side, and we have to enter payment made to creditors to debit side. Okay, now see the adjustment. See the adjustment. All assets realized for rupees 1,33,000 and creditors were paid at a discount of 2%. Okay, so how much creditors? 40,000. No, 2% discount, remaining 98% paid off. Okay, now we need to enter these transactions under realization account. How much amount inflow and how much amount outflow. Okay, see the realization account. We have entered total assets realized for how much? 1,33,000. So these are the total assets realized for 1,33,000. And how much amount we have to pay? 40,000. No, and they have allowed 2% discount. So 2% minus, remaining 39,200. Payment made to creditors to bank. Okay, now see the adjustment. We have entered all assets realized and creditors paid off. Okay, now we need to enter the dissolution expenses amounted to rupees 10,000. This is also payment. No, this you have to enter under debit side of realization account. Okay, see the realization account. We have entered realization expense 10,000 under debit side of realization account. Okay, so far we have done these things. That is, we have transferred all the assets and transferred third party liabilities, and we have entered the assets realized for cash. No, 1,33,000, and how much amount we have paid after allowing 2% discount? 39,200 we have paid, and realization expense 10,000 paid. Okay. Now we need to close realization account in order to find out the balancing figure. The balancing figure will be either profit on realization or loss on realization. Mostly for dissolution problem, you will be getting only loss on realization. Okay. So whatever may be the result, that will be transferred to all the partners' capital account or current account according to their profit sharing ratio. Okay. Now let's see the balancing figure. See the realization account. Here we have got loss 31,200. Okay. Whatever may be the result, that will be transferred to all the partners' capital account. See, in the previous video, we have transferred the loss to partners' current account. The reason is, if the partners maintaining fixed capital method, the loss or profit will be transferred to partners' current account. But according to this method, that is, when the partners maintaining fluctuating capital method, the loss or profit will be transferred to partners' capital account. Okay. Another important thing is, this will be shared by partners according to their profit sharing ratio. But in this particular problem, profit sharing ratio is not given. In that case, they can share the loss equally. Okay. So here 31,200 divided by 3. 3 partners are there, no? So how much? 10,400, 10,400, 10,400. Okay. See, after preparing the realization account, now we need to prepare partners capital account. Okay. See the problem. Now we are going to prepare capital account. While you prepare the capital account, you need to prepare capital account separately for solvent partner and separately for insolvent partner. So according to this problem, who is insolvent? See the adjustment. Z is insolvent. Okay. So what is the meaning of insolvent? If any one of the partners liabilities are more than assets, then that the particular partner is called insolvent partner. Okay. In this problem, Z's capital showing debit balance. Okay. Which means he is an insolvent partner. Okay. X and Y are solvent partner. Now we are going to see how to prepare capital account for insolvent partner and solvent partner separately. See the capital account. Here we have insolvent partners capital account separately and solvent partners X and Y are solvent partners, no, capital separately. Okay. First enter the opening balance. Z is having debit balance, no, asset side. So enter here. X and Y is having credit balance, that is under liability side. So enter under credit side. See the balance sheet. X and Y is having credit balance, that is liability side. No, X how much? 50,000. Y's capital 40,000. But Z's capital showing debit balance because asset side, no. So how much? 20,000. So enter in their respective capital account. See, we have entered opening balance. Okay. Z's capital, that is insolvent partners capital, how much? To balance brought down 20,000. And for X and Y, by balance, that is credit balance. Okay. Because they are solvent partners. Okay. So by balance brought down 50,000 for X and 40,000 for Y. Okay. Now we need to transfer any accumulated and undistributed profits and losses any. Okay. For that, just see the balance sheet. Here there is no loss. Okay. If there is any loss, that will be given under asset side, debit side. In this problem, there is no loss, but we have general reserve. So general reserve, it's an undistributed profit or accumulated profit. This amount belongs to all the partners. Okay. So transfer this amount to all the partners capital account according to their profit sharing ratio. Since the profit sharing ratio is not given in the problem, you can share equally. Okay. For all the three partners. See, we have transferred general reserve, that is undistributed profit, transferred to all the partners. Z's how much? 20,000. X and Y 20 and 20. Okay. In case of any loss, that will be transferred to partners capital account debit side. In case of loss, debit side. In case of profit, credit side. So here we have got general reserve. So general reserve also, it's like a undistributed or accumulated profit. So we have transferred this to partners capital account credit side. Okay, equally 20,000, 20,000 and 20,000. Now we need to transfer realization loss to all the partners capital account separately. Okay, here we have Z's capital separately? No. This is the loss. So this need to enter under debit side. Even X and Y's capital also need to enter under debit side of their capital account. See, we have transferred loss on realization to all the partners' capital account separately. Okay, Z's capital 10,400, XY 10,400, 10,400. We have entered under debit side. Okay, now first we need to close insolvent partners capital account. Okay, but here before you close the insolvent partner capital account, just see is there any amount contributed by insolvent partner towards his loss. Okay, see the problem, see the adjustment. Z is insolvent but his estate pays rupees 5,000. Okay, so Z insolvent but he has paid 5,000 rupees. So this amount you can credit under insolvent partner's capital account. If insolvent partner contributes anything, that will be credited to his capital account. If nothing is contributed towards his deficiency, means that's all. You just leave it. Otherwise, if there is any amount contributed, that will be credited to his capital account. Okay. See, Z's capital account, he contributed 5,000 rupees. No, that will be transferred to insolvent partners capital account credit side. By bank, how much? 5,000. Okay. Now we need to close insolvent partner capital account in order to find out his total deficiency. Okay. That total deficiency will be shared or transferred to solvent partners capital account. Okay. The solvent partner will bear the total deficiency of insolvent partner according to their adjusted capital ratio. That is the major difference between this particular method, that is fluctuating method, and the previous one, fixed capital method. So according to the fixed capital method, whatever capital is given in the problem, in the balance sheet, old balance sheet, that capital will be taken as ratio, capital ratio. But according to fluctuating capital method, you need to do some calculation in order to find out the adjusted capital ratio. After finding the ratio only, you can transfer the total deficiency to all the solvent partners capital account. I will show you the calculation, how to calculate adjusted capital account. Okay, now let's see the balancing figure, that is total deficiency of insolvent partner. See, while you close the insolvent partner capital account, you will be getting the total deficiency. So how much total deficiency? 5,400. This will be transferred to solvent partners capital account. We need to divide this amount among X and Y according to adjusted capital ratio. Okay. Now I am going to show you how to calculate adjusted capital ratio. After finding that, we can divide among X and Y. Let's see the calculation. See, according to fluctuating capital method, we need to do separate calculation for calculation of capital ratio. Okay. See, in order to find out the capital ratio, we need to start with their opening capital balance. Okay, that will be given in the balance sheet. That is in the problem. So enter their capital account balance and the adjustment of reserves, any accumulated profit or loss, but not realization profit or loss. Okay, we have transferred all the losses to partners capital account. No, so don't consider that profit or loss on realization. Except this, we need to adjust any reserves, any accumulated profit and losses, any interest on capital, drawings, unrecorded assets and liabilities. So these are the items we need to adjust with their capital account, either plus or minus accordingly. Okay, after adjusting all these things, you will be getting one balancing figure now, that is the adjusted capital ratio. So as per the balance sheet, their capital balance is 50,000 for X and 40,000 for Y. Okay, and we have transferred general reserve. How much general reserve? 60,000, and we have transferred this general reserve to all the partners according to equally, because profit sharing ratio is not given now. So we have shared equally 20, 20, 20. So X 20,000, Y 20,000. Now what is the total adjusted capital for X? 70, for Y 60. Now what is the ratio? 70 is to 60 or 7 is to 6. So this is the adjusted capital ratio. Okay. Now see the solution. See the insolvent partner capital account. We have got deficiency. How much? 5,400. So this will be bear by solvent partner according to adjusted capital ratio. So what is adjusted capital ratio? 7 is to 6. Okay. So according to this ratio, we need to divide this deficiency among X and Y. So how much? 2,908 and 2,492. So this is the proportion. The loss is transferred to X and Y according to this ratio, adjusted capital ratio. Okay. So this is the first impact of fluctuating capital method. Okay. Now we are going to see solvent partners capital account. Okay. See solvent partners capital account debit side we have entered Z's capital account, that is deficiency 2,908 and 2,492. Now the solvent partner need to bring cash equivalent to realization loss. So we have transferred realization loss to insolvent partner as well as solvent partner equally. No. Now the solvent partner need to bring cash equivalent to realization loss. Okay. Assume that they have brought the cash equivalent to realization loss. So enter that amount under credit side of solvent partners capital account. By bank, how much? X 10,400, Y 10,400. Okay, that's all. We have entered all the transactions. We have started with opening balance and we have transferred accumulated profit, that is general reserve. Okay, and we have debited realization loss. That realization loss contributed by solvent partner, and we have transferred insolvent partner loss to solvent partner's capital account, debited. Okay, now suppose if the solvent partner is also having debit balance of capital account, which means in the old balance sheet, solvent partner's capital account showing debit balance, that is asset side, but the partner is solvent, his capital account showing debit balance. In that case, solvent partner, those who are having debit balance of capital account, need not bear insolvent partner's deficit. Again, I repeat, the insolvent partner deficit shared by all the solvent partner. Okay. If the solvent partner capital account showing debit balance, in our problem, it has only credit balance. So no problem. Suppose X and Y's capital showing debit balance mean that particular partner need not bear this deficit, that is this loss. Okay. But in this problem, both the solvent partners capital account showing credit balance. So both the partners need to share or bear the deficit of insolvent partner. That's all. Now we can close solvent partners capital account in order to find out the balancing figure. If we get any balancing figure under debit side of capital account, that is the final settlement made to solvent partner. Suppose if there is any balancing figure under credit side of solvent partners capital account, then that is the amount additional contribution made by solvent partner. We'll see whether settlement made to partner or we are going to collect amount from partners. Okay, let's see the balancing figure. See the capital account of solvent partner. Here we are getting balancing figure under debit side. Okay, for X how much? 6792. For Y 57,508. Okay, so that this is the final settlement made to X and Y. Okay, now finally we need to prepare bank account. In bank account we are going to enter receipts and payments. So whatever receipts, that will be entered under debit side and all the payments will be entered under credit side. Okay, you can refer the realization account and capital account. Okay, in order to prepare the bank account. See, in the realization account, here we have by bank, that is assets realized. This one is receipt, inflow of cash. This will be entered under debit side. And in the debit side, they have given creditors, that is the payment made to creditors and realization expense paid. Okay, these are the two transactions related to bank. These are the payments. No, this we need to enter under credit side of bank account. This one receipts and these are the payments. Okay. Now see the Z's capital account. Here we have one bank, that is by bank 5,000. This is the amount contributed by insolvent partner. Now this is given in the adjustment. So this will be entered under debit side, that is receipt side of bank account. Now see the solvent partner's capital account. Here we have assumed that the solvent partner brought amount equal to realization loss. How much? 10,400, 10,400. This we have to enter under debit side, that is receipt side of bank account. And this is the final payment made to X and Y. No, this we need to enter under payment side, that is credit side. Now let's see the bank account. See the problem. While you prepare the bank account, okay, you have to start with opening balance. See the problem. Here we have bank balance. How much? Under asset side bank balance 15,000. So this is the debit balance. No, to balance brought down 15,000. See the bank account. First you have to start with opening balance. Okay, to balance brought down 15,000. It is given under asset side. Okay, and then to realization account. This is the assets realized for cash 1,33,000 receipt. And then Z's capital, that is a insolvent partner contributed 5,000. No, it is given in the adjustment. Okay, this is also one kind of receipt. And then X capital, Y capital. This is the realization loss. Okay, the equal amount is contributed by solvent partner. X and Y are solvent. No, they have contributed realization loss 10,400, 10,400. These are the total receipts. Now see the payments. The first one is third party liability paid after allowing 2% discount. How much? 39,200. And then by realization expense paid, no, 10,000. And then final payment made to X and Y. This I have taken from solvent partners capital account balancing figure. By X capital by Y's capital. 67,092 rupees and 57,508. So these are the payments. While you prepare the bank account total will be equal. There will be no balancing figure under bank account. Both receipts and payments are equal. Okay. So this is the way to solve insolvency of a partner when they are maintaining fluctuating capital method. Okay. In the next video, we are going to see insolvency of two partners. Okay. So you can find the playlist link in the description box. Hope you like this video. Please hit the like, comment, subscribe and share with your friends. Thank you.